Though wondering, RBI has done these rate cuts, right? And therefore, I wonder which of the asset class, as you said, Naren, is cheap enough to invest in. Gold is high, silver is high, everything is expensive. So, if you equities mein paisa nahi daloge, where do you put in money?
That is why actually if you look at it from a medium to long-term view, people have to condition themselves to a moderate return, first of all. And how to convince them, I just do not know. How to convince them that today even the risk-free rate has come down to 6.3%. So, and if you go and tell people what is moderate return, I don't answer them. I say that double digit is today 1.5 times the 10-year GSEC. People think 10%, what is 10%? I tell them equity can give negative returns. See, it's a very, very tough job. And honest truth is, if you look at the last 1 year, returns have been very moderate in equity. And despite that, people think equity gives very big returns. That is the irony of the situation.
Is it because the diversity of availability of sectors and themes, even if the Nifty is flattish or the Sensex is flattish, is very high? I mean, a lot of new sectors have gotten created in the last 3 or 4 years. Is the optionality value very high, or is it just that the retail investors believe that what has worked in the last 4 or 5 years will continue to work?
No, I think after 2011, we have never had minus 20%. And till you have minus 20%, people will not believe me that equity has risk. People say debt has risk. That is the challenge, and that's why when I tell asset allocate, but we have managed to convince people, my sales team has managed to convince people, put money in multi-asset, put money in categories like balanced advantage. We have succeeded, and but I would still say this is not an easy task.
Most certainly. Having said that, a lot of people who are watching this would also want to know as Naren's view on equities by and large. So you've given us your broad view. Moderate returns expected, markets are expensive. You believe large caps are the port of call within equities. Just trying to understand, Naren, a lot of newer themes, the popular themes, one where the promoters or the companies are talking about strong growth, energy transition, EMS, platform companies, etc., are mostly not a part of the Nifty 50 or Nifty 100. A lot of the promising companies are probably beyond at least Nifty 50, if not Nifty 100, right? Do you feel that there will be pockets of strength even if the markets were to consolidate / correct?
See, today if you take, for example, this electronic manufacturing, you look at the valuation, they are already positioned for 4 years of growth. 4 or 5 years of growth, then you don't know. Suppose in the 3 or 4 years of growth there's a bad year. It's just not. See, the markets today, there are no easy pockets. In fact, over the last 3 to 6 months, we found oil and gas to be the best sector because no one was willing to look at it. And oil and gas did well in the last 3 to 6 months quietly because no one was willing to look at it. So did anyone believe that oil and gas will deliver good returns? No one. Yeah. So the fact is actually the best opportunities today is coming out of stocks where people have got frustrated and they sell. Because every stock is discovered today. Every stock which people want to think about is discovered. So return is made today out of stocks where people have got frustrated, not delivered for the last 2 years, waited patiently, they sold the stock. We can make money out of those stocks. This is what is the easier idea because there is no stock which is not discovered in India at this point of time. Every stock, there are so many brilliant stock pickers in India today. They have managed to find it and invest in the last 3 or 4 years. So, but now today some of those stocks don't deliver. They wait 1 quarter, they wait 2 quarters, they wait 2 years. Then after that they get patient, they lose their patience and sell. Actually, people like us today are waiting for all these stocks where people have lost patience and they sell to us. Those are the ideas we get, rather than, new ideas.
And is it very bottom up or is it sector specific too? Are there sectors like oil and gas which are hated right now according to you?
It is coming across sectors because in many sectors there are stocks where people have lost patience. It can happen in retailing, it can happen in sometimes in mid-cap cement, it can happen in every sector, it can happen in auto anchors. It is happening across sectors because you have to think about it. This is a long bull market. In that long bull market, there are people who have lost patience in some of the stocks. In fact, today the ideas are not new. The ideas are old, but that it is that old idea which has not worked, which is coming out as a good idea now.
Got it. So how do you then, and this is lovely, Naren, so lots of wisdom here. Just one thing, what is the new thing that you're doing? Because you told me that you are doing NFOs which are not benchmarked against others. I believe there is a factor investing or a momentum fund as well. I mean, tell us a bit about what is the new thing that you're doing in order to kind of generate alpha.
No, we were always known for value. So when we thought of momentum as an NFO, people were actually very surprised.
Exactly.
So, we obviously were the people who used to come up with the ideas first. But here, when we thought of price momentum, we didn't like the idea. But later we realized momentum can be done through earnings revision. And earnings revision as a theme works very well. And it doesn't work like value. That's why I can't be a fund manager in that. But the fact is that you take something like a telecom where we bought early and we have cut some of our positions. In earnings momentum, what happens is you buy a bit late, but you hold on. Look at telecom, the kind of returns it has delivered at this point of time. Fabulous. But with a value orientation, what happens? You buy it early, but then you don't keep it till today. So you lost one part of the returns. So we said that earnings revision as a model and active momentum works. And that is the kind of idea. So, you have to come up with interesting late cycle funds. Because today we are in that late cycle kind of framework at this point of time, not an early cycle. In early cycle, you buy value. And you will make money out of value. Today, there is no value in the market. Today, you are in late cycle. In late cycle, you have to do more interesting things like momentum, because that is the kind of thesis which works. Because there are sectors which keep going up, because the earnings keeps revised upward, because the companies keep on continuing to do well. But if the companies stop doing well in an active momentum kind of fund, we will sell it off. That is the kind of framework we believe in. So we thought we should do something interesting. So we first came up with a minimum variance fund, which was actually a different type of fund. Now we've come up with an active momentum fund. Because along with, people are bored hearing asset allocation from us. We have to do something in addition to asset allocation. That is what we thought we should do.
Naren, my final question on themes that are, to my mind, based on I don't have data to back this, but based on the questions that we receive or the comments that we received on our social media platforms and handles, people want to know about two things predominantly the most. I would love to know if you believe that these are late cycle, is there value here? One of them is defense, which got a revival post-May, the unfortunate event in May, but suddenly the sector got revived. And the other is what people say is a 5-10 year story, which is energy transition. Both are over-owned, crowded, retail, institutional, everybody's in these. What are your views here in this pocket? Because again, they are not cheap. None of them are. All facets of energy transition companies, be it T&D, be it generation, etc., are expensive. And almost everything in defense doesn't look cheap. What are your views here?
No, energy transition is bound to happen. If you look at energy transition, and you could play it through transmission, you could play it through, solar, but I think it is bound to happen. And given that we have sunshine, I think, as the technology develops, as battery technology develops, it is something which is waiting to explode in the next 10 years. You have to identify the right technology, and if the correct technology comes, you're going to bet on it, it is going to work. But you've seen the rare earth problem in recent times. So frankly, we believe that you have to keep one leg in, one leg out, and keep on doing work. Once you are very clear, you can actually go in with both your legs in. That stage has still not come. So we keep on doing work. See, in defense, frankly, it's a completely, it's a very difficult sector for us to understand, because no one is going to come and explain to you all the technologies involved. It is stupid of any government to come and say, here is the technology, I'm going to explain what I'm doing. It makes no sense for them. So what happens is we have to buy on incomplete information. When you are going to buy on completely incomplete information, we are capped to the extent that we can buy. Because it is illogical for any company to explain what they're going to do in defense. If they start doing that, then we would distrust this, because if that company is going to come and explain this is what you're going to do, then I wouldn't trust that company in defense at all. The less the more ambiguous they are on what they are doing, actually it means that they are actually doing defense. That is where the dichotomy comes for us. That's why I think it is very difficult for us to actually do proper research in defense. It has to be somewhere, you say, okay, we'll take this risk in this company, although this company is not explaining things to us properly, and then take that bet on a few government companies, on a few non-government companies, and then move on. You can't expect them to explain to you anything transparently. It is not fair on our part also to expect our companies to explain to us anything.
Okay, my final question, Naren, because can't end this, and I should have asked this to you earlier maybe, but this whole thing around tariffs and trade deals, etc. India doesn't have a very large exposure to US, but parallelly India is also signing FTAs with other countries. What do you make of this whole global trade realignment and what it could mean for Indian economy and markets?
See, I think, what we first learned was we thought we should react to it in a big way. Then we later realized that India is such a strong economy and much more domestic than most economies. And we are not affected so much. So if you look at it, once that initial phase happened, after that India has become not very worrying, because at the end of the day, if you look at it, everyone needs India's consumers. Beyond a point, I don't think India is going to get as affected by trade in goods as much as what it would happen to a Vietnam or a Cambodia or all these countries. I think what is important is how do we make use of the fact that we are the world's biggest consumer nation soon, and how we can use that strength. And that's why I think we are less affected by all these things. What is needed, however, is we should become stronger in manufacturing. And that is a task that we have. The way we have managed to become strong in services, we have to become stronger in manufacturing. Is there any country which has become strong in both? The answer is no. There is no country which is strong in both. It's either strong in services or strong in manufacturing. That is the reality. And that is why I would say I won't over worry about it. That is why I have more worry, am I allocating money which is given to us by investors well? Are we doing it carefully? A little less return, but carefully, I'm happy. And given the amount of money that we are getting today from so many investors, that is what worries us, not these trade, because every day morning we wake up to some tweet, we look at it, then how much to worry about it? We have to worry, are we managing money well? Are we not managing very well? That's what worries us every day.
Fantastic talking to you, Naren, today. Some real good nuggets. Thank you for your time and your insights, and I look forward to talking to you hopefully soon enough.
Thank you. Thank you very much for the opportunity.
No, the pleasure was entirely ours, Naren, especially so today. It was fabulous, and viewers, thanks so much for tuning into this wonderful conversation with S. Naren.